Business owners, retire without selling. Imagine this. You've built a thriving business that's been your life's work. It's your legacy, your pride, and the engine of your financial success. But now, as retirement looms, you're faced with a tough question. Do you really have to sell it to secure your future? What if I told you that selling isn't your only path to a comfortable retirement? In fact, many Canadian business owners are stepping away from day-to-day operations and enjoying financial freedom without ever letting go of their company. Sounds too good to be true? It's not, but it takes careful planning to make it happen. Studies show that over 70% of business owners want to retire without selling, yet most don't know how to unlock their business's wealth without giving up control. Today, I'm breaking down 12 critical challenges you'll face when trying to retire without selling your business, and the proven strategies to overcome them. Whether you're a decade away from retirement or ready to step back tomorrow, this video will give you the roadmap to retire on your terms. Keep your business and live the life you've always dreamed of. Stay with me, because this could redefine your retirement plans. Hi, if you're new here, my name is Charles Lecalzi, Associate Investment Advisor with IA Private Wealth, Zenith Private Wealth Council. If you're a business owner who wants to retire without selling your company, this channel is for you. So hit the like button, subscribe, and let's dive in. Retiring without selling your business is a powerful goal, but it's not without its hurdles. Your business has been your primary income source, and shifting it into a vehicle that supports your retirement while you retain ownership requires strategic planning. Let's explore the 12 key challenges you'll face and the solutions to ensure you can step away with confidence. Problem number 1, lack of passive cash flow. Your business generates income, but it's likely tied to your active involvement. Without you, the cash flow might dry up, leaving you with no retirement income. Common issues. Revenue depends on your daily oversight or client relationships. Profits are reinvested into growth rather than distributed to you. No system exists to generate consistent income without your input. Solution: transform your business into a passive income machine. Hire or train managers to handle operations. Document processes to reduce reliance on you. Shift your business model towards recurring revenue streams like subscriptions or long-term contracts. For example, a client of mine who owned a consulting firm hired a senior manager and standardized their services, allowing them to draw a steady dividend without daily involvement. Problem number 2, inadequate retirement savings. If most of your wealth is tied up in your business, you may lack liquid savings to fund retirement. What to know? Business assets aren't really accessible for personal expenses. Relying solely on future business profits is risky if the market shifts. Your solution: build personal savings outside of your business. Contribute to your TFSAs, RSPs, or individual pension plans to create tax-efficient retirement funds. Work with a financial planner to calculate how much you need to save annually to meet your retirement goals, factoring in inflation and lifestyle costs. Problem number 3, no succession plan. Stepping back without selling requires someone to run the business in your absence. Without a succession plan, operations could falter, jeopardizing your income. Your risks: key employees may leave if roles aren't clear. Family members or partners may lack the skills to take over. Lack of leadership can reduce business value and reliability. Your solution: develop a succession plan 5 to 10 years in advance. Identify potential leaders, employees, family, or partners, and train them to manage the business. For example, a client who owned a manufacturing firm groomed their operations manager over 3 years, ensuring a smooth transition when they step back. Document a clear organizational structure and incentivize key staff with profit sharing to retain them. Problem number 4, your high tax burden. Extracting money from your business for retirement can trigger hefty taxes, reducing your usable income. Tax challenges: dividends or salary payments are taxed at personal income rates, which can exceed 50% in high-income brackets in Canada. Poor tax planning can erode your retirement funds. Solution: work with a tax advisor to optimize withdrawals. Strategies may include using a holding company to defer taxes on business profits, leveraging the lifetime capital gains exemption if you partially sell shares to family or a trust, up to $1.25 million for 2025. Paying yourself a tax-efficient salary dividend mix. A client saved $50,000 annually by restructuring their compensation with a tax professional's guidance. Problem number 5, business volatility. If your business revenue fluctuates, relying on it for retirement income can be risky. Volatility risks: economic downturns or industry shifts can cut profits. Client loss or supply chain issues can disrupt cash flow. Your solution: diversify your business revenue streams to stabilize income. For example, a retail client added an e-commerce platform to their brick-and-mortar store, reducing reliance on local foot traffic. Also, create a personal investment portfolio outside the business to buffer against volatility, including bonds or dividend stocks for steady returns. Problem number 6, over-reliance on the business. If your entire retirement plan hinges on your business, you're vulnerable to unexpected setbacks and potential risks. A single bad year could derail your retirement. Personal emergencies might force you to pull money from the business, harming its stability. Solution: build a diversified financial safety net. Save 6 to 12 months of personal expenses in an emergency fund. Invest in non-business assets like real estate or ETFs. A financial planner can help you allocate assets to balance growth and security, reducing your dependence on the business. Problem number 7, lifestyle inflation. Business owners often increase spending as their business grows, making it hard to live on less in retirement. Common traps: upgrading homes, cars, or travel habits without planning for long-term costs. Underestimating retirement expenses, which Statistics Canada estimates at about $50,000 to $80,000 annually for affluent retirees. Solution: create a retirement budget now to align with your lifestyle with sustainable income. Test living on your projected retirement income for a few months to adjust expectations. A client who loved luxury travel scaled back to one major trip per year, freeing up funds for other retirement goals. Problem number 8, lack of delegation skills. If you're a hands-on owner, stepping back without selling requires trusting others to run your business. Delegation challenges. Micromanaging can burn you out and discourage capable staff. Poor delegation can lead to mistakes that hurt profits. Solution: invest in leadership training for yourself and your team. Hire a business coach to help you delegate effectively. Set up regular check-ins to monitor performance without being overly involved. A client who struggled to let go implemented weekly reports for their team, allowing them to stay informed while focusing on retirement planning. Family or partner conflicts. If family or business partners are involved, disagreements about your retirement plans can complicate the transition. Issues: family members may expect to take over without proper qualifications. Partners may resist changes to support your retirement goals. Solution: hold open discussions with families and partners years in advance. Draft a shareholders agreement or family business charter to clarify roles, ownership, and profit distribution. A client with 2 children in their business used a mediator to align expectations, ensuring a fair transition plan. Neglecting personal health. Your ability to enjoy retirement depends on your health, but business owners often prioritize work over wellness. Health risks. Stress-related illnesses can increase as you plan your exit. Medical costs like dental prescriptions can rise without employer benefits, costing $5,000 to $15,000 annually per a 2024 report. Solution: prioritize health now to reduce future costs. Schedule regular checkups. Invest in a fitness routine to cover gaps in provincial plans. A client who neglects their health faced high dental costs in retirement but mitigated this by private insurance early. Problem number 12, no comprehensive wealth plan. Retiring without selling requires a holistic strategy to integrate your business income, personal savings, and investments. Risks: mismanaging withdrawals can trigger unnecessary taxes or deplete savings. Failing to coordinate business, personal finances can lead to shortfalls. Solution: work with a financial planner to create a tailored wealth plan. This should include a retirement income strategy, blending business dividends and investment returns, tax-efficient structures like holding companies or trusts, regular reviews to adjust for market changes or personal goals, a client's plan combined business profits with a diversified portfolio generating $100,000 annually in retirement income without selling. Retiring without selling your business is an ambitious but achievable goal. By addressing these 12 challenges: cash flow, savings, succession, taxes, volatility, reliance, lifestyle, delegation, family conflicts, health, and planning, you can step away from daily operations, keep your legacy intact, and enjoy a financial, secure retirement. If you're thinking about retiring without selling your business and want to ensure you have enough to retire, click the link below and book a consultation with me. I'll help you create a personalized strategy so that you can retire with confidence. Drop a comment below. What's the biggest obstacle you're facing when thinking about retirement without selling your business? I'd love to hear your thoughts.